Yo, what's up traders? Welcome back to another video. Today I want to clarify how the open of the day determines the overall bias of the day, and I want to show you 3 trades that that happened yesterday. I took 2, one on gold, one on Nasdaq, and the first one is on gold, and this was in the London session. This was a very good trade. I actually got around 150 pips, and I want to show you how the open of the day influenced this trade. Now, let us remove everything and we start from the beginning. Alright, now the book Mind Over Markets explains that there are certain types of days, and they are all influenced by the open of the day. Now, there are the main types of days that I look for are what they call the open drive day, or the open drive market, and the open test market. Now, so for example, this is the beginning of the day, this line. I'm assuming it's this line. So when the market opens, like this, and instead of doing whatever it is, it just starts moving away from the open. This is an open drive market, and for most of the part this becomes a trend day. So when I see this, I know that we will continue going higher. Now, when you know we are going higher, you know that there are stop hunts to the market. Goes up and stop hunts down, goes up and continues, that is the nature of the market. Goes up, goes down. Now, say for example it's the New York session and we are up high. So I know that even though we are going higher, there might be a stop hunt. I might look for the stop hunt and trade that stop hunt. I might wait for the stop hunt to end. If it's in my time frame, that is just knowing what you want to look for in the market, but knowing the overall bias that this is an open drive market, and the bigger probabilities that we will be going higher, we will continue higher or lower. Now, there is the open test market. So for example, this is the previous day's close. When the market opens, it tests first what was there and then continues like that. So this is an open test market. They've opened and then they went below to see how the buyers would react, or how the sellers. Well, read the book. There's a way you understand it in your own perspective, but the point is that the open test drive, now like this is an open test drive, the way it's forming, because they went ahead and tested that high, failed to break above and continued lower, and then it's a breakout to continue down. Now, I don't know how this market will form. It might come back higher, but if it continues lower and fails to break this initial balance or the open, then I know that I am looking for sells. Anyway, back to yesterday's trade. Now, as you can see, this market, I like to draw my first line at the first candle, and the first candle is a bullish candle, so that is where it is. Now, 1, 2, 3, 4. The initial balance is the first 1 hour. How the market behaves in the first 1 hour. Now, as you can see, the market fails to break below the open, meaning I know that the buyers are in play. Now, the first hour sets the high and the low of the session as usual. Now, guys, we know that we are going higher, and this is the information that we have. That is the only information that we have before the second and the third hour forms. So look at the way it has gone. 1 push, 2 push, then a 1, 2, 3. All right. So once we know that it's at a 33 trade, we know that there will be a retest for continuation higher. So that is just my thesis. Once you have your thesis, you wait for the market to confirm it. If it does not confirm it, then you have other instruments to check. So your job is to have a thesis and have a strategy in place. If the market obeys your strategy, then you're good to go. The first hour sets the high and the low of the session. And from our previous information, we know that this is at 33. 1 push, 2 push, 3 push to the high. And then the third hour breaks above. So another thing, always wait for the market to come back to the extremes. If the market does not come to the extreme, leave that instrument alone. Move on to the next instrument. That is how you differentiate high quality setups. Now, the market comes to the high of the day, high of the session, breaks above, pins, and breaks back in. Then we have our we have our M pattern with the engulfment. So where is our M pattern? Our M pattern, we've gone higher, came lower, then higher, and then broke break structure. This is an M. So we are looking for a retest and an engulfment. So where is the retest? Here is the retest, and it is in 1 push, then a 1, 2, 3. 1 push, 2 push, 3 push to the high. This is the engulfment at 324, and that was my entry. Now, granted, the volatility was high, so I had a let me check. It was a 50 pip stop loss. You see where I entered above. Well, the market gave me a nice opportunity at this pin for a 50 pip stop loss and a 150 pip take profit. There's your setup. So when it comes to setups like this, it is your risk management that helps you. So yeah, I think that is another, I'll talk about that in another video. For now, that is how that setup formed. Now, during the New York session, another setup formed. Very nice setup. Now, we know that the market is continuing higher, but they've broken down. So they've broken down. Now, I was looking at my charts the first hour, but I was caught up doing something else, and I came back during the third hour. So my thesis was that there will be a continuation because this is a breakout. So I would have looked for my continuation in the second hour, a continuation pattern, but after 9:30. Now, mostly when I'm looking for continuation patterns, I wait for after 9:30. Now, they came, and we have our M pattern here after M pattern, but they never gave us an engulfment. No engulfment anywhere. So this would have been there. I would not have traded it. But you see, they broke structure. So if the market is falling, it will always retest. So if you didn't get the initial falling, then there is the reversal. Now we have the break of structure, and then a mini retest for the engulfment. So this is the engulfment, and this is where the setup is. We are going long. For your 50 pips. Easy 50 pips. Easy 50 pips. Guys, see the way these things works. These things work. Now, I got on a trade yesterday on Nasdaq, but I got out of break even in the New York session, and I want to talk about that. Someone asked me about trade management. Now, guys, we want a trade to enter a trade in and out, get the money and get out. So as you can see, this setup, everything is still the same. First hour sets the high and the low of the session. Second hour breaks out, gives us a 1 push, 2 push, 3 push, break of structure, retest, and then I got in the third hour. I came in the third hour. So in the third hour, this is where I could have entered. This was the perfect trade setup, because they broke structure, retested, and the engulfment here. But still, once they break structure, see, say for example, this is the lower low. Once they break it, in your mind automatically you know that they are supposed to continue lower. If they start going higher, they will come and retest whatever it is. Now, for me, yesterday when I entered this trade, where did I enter it? I got in at my forgetting. I got in here. I was aiming for 50 pips. Actually, I was aiming for that, like that. And guys, when the market breaks this level, they've broken it. I'm going to break even when they break it. Here they did not. This is not a breakout. This is just like a test. This is the breakout. Once they break out like that, I'm going to break even, because I know once they come back, they are coming to stop hunt me. So understand. Just look, when you enter a trade, master the strength to observe that trade to completion, so that you can be able to know when to exit and when to let the squeeze the most out of the market. Anyway, hopefully you got value from today's video. Make sure you